I figured we cover a couple of stocks that we're actually either looking to buy or buying actively, and I don't want to cover strictly Tesla and Enphase, obviously,
Right.
at least for me, and obviously Tesla for you. But I want to talk about a couple of things that I'm also looking at, just to show I have some breadth in my investing.
My stock trading recently has been pretty boring because I'm just funneling as much cash as I can get into Tesla. If you are a member of our Patreon, you have access to this area in our Discord where you can see the trades that Vitaly and I are making. We post these real time. So here I was on the 21st. I picked up I'm at 5 1/5 of a share at 1,083 on the 21st. I
So it
picked up
seems like
another
you're
share.
clearly sticking to buying Tesla, Tesla, Tesla.
A lot of what we're seeing in Tesla stocks non-movement is personal attacks towards Elon. Like Tom Nash actually had posted a video where he was talking about this market is not following logic at all. It is completely sentiment based. And as long as they don't have a miss on any of the key numbers, I cannot see this stock staying at this level for much longer. Current price is $770. And this is what I'm looking at. I sort of just drew a trend line at the places that it's found support. And I'm following the overall trend line of the peaks. And it seems to be converging at some point in June of this year to this level of support around $630. But because of this here, we thought we were in a downtrend and then it popped. I am buying as much Tesla as I can right now on the off chance that the sentiment reverses and Tesla does go back to $1,000 or $1,200. That's why my trading lately has been pretty boring because I am just focused on one thing.
There's going to be some boring stocks here, guys. I have three stocks I just want to quickly go through. Why am I buying Amazon and Google now? We all should have been buying it earlier, obviously, but they're down off their highs. I just want to point out that I never had a big position in Amazon, and I'm getting a bigger one, especially in this type of market, which is giving great companies, right, knocking them down. So you might say, look, it's PE compression, and maybe Amazon shouldn't be at a 54. Everything's going down to 17 or 16. Look, possible. I don't know. I'm just looking at the data from what Amazon's doing currently and how much money they're actually raking in. And it seems like a no-brainer. They dropped to a market cap of $1 trillion now, so they're more reasonable. We call it reasonable at $1 trillion. But look, this is a giant company, okay? They deserve their valuation. We know AWS by itself is probably worth 700 billion. So you're not paying much, if anything, for the actual other businesses they have. And also, if you're interested in robotics and you're interested in self-driving cars and you're interested in Rivian, like they have a piece of everything. So is that good or bad? I don't know, but I think they have a lot of opportunity ahead. And the other thing I just want to point out is they have dropped from their peak of, I think it's $3,700.
30%, right? More, almost more. Oh, no.
Well, we can do, yeah, we can take
It's got
a
to be
look.
more. 40%.
40%, and we went as low as 45%. So remember, this is a big company dropping 50% almost. Okay, this
But I
is
mean, look,
massive.
the last time Amazon was that price was on the recovery of the pandemic.
People think that, well, maybe Amazon's overvalued. So let's take a look at the whole chart of Amazon. I don't know. That chart looks pretty good. Look, it gets overvalued and then it has a massive correction. And the other thing I want to point out, we are underneath the, like you see these points where it's under the 200 week?
Yeah.
Not the 200 day, the 200 week. We're touching it. We are underneath the 200 week. And I think we're fighting to get above it. And I'm not saying it's going to get there anytime soon. I'm just pointing out that these look like opportune times to buy big companies that are going to be around 100%.
Yeah, Amazon is not. Amazon's.
We're not
going.
speculating here. This is not a speculative bet, okay?
Your packages are still going to arrive.
It has dropped way below the 200 week, but it usually goes above it again. So it has a long history of following this, and I'm a buyer at these prices.
That price that they're at now was right around when the market recovered after the initial drop. And that's when the Fed started printing a bunch of money.
It can go lower. Look at this. So maybe if it does hit the bottom, it's $1,600.
I'd be curious to know what that PE was, so it could still drop even further.
The PE is sort of weird to look at Amazon. And actually, Joseph Carlson had a whole video. Maybe we should include a link up there or below, maybe in the description, about how Amazon's PE is sort of like not a great metric to look at because they have all these bets that they're making and investing a lot of capital into.
Right.
Like they literally doubled their warehouses and the people that they're hiring. So they're growing massively. So this PE might be affected, not really showing how fast that they can accelerate in a couple of years in the future.
Right. You're saying these are like one-time expenses?
I don't know. I'm not saying it's one time because Amazon has a lot of capital expenditures, but they grew massively in the last couple of years where they almost doubled, I believe, their capacity for like the actual warehouses and the trucks and the people and the logistics business. So it seems like, oh, they're wasting all this money. When are they going to actually have free cash flow. One of the math thing, I guess, that I was looking at, thanks to Joseph Carlson's video, there you go. Their free cash flow took a real nosedive. That is because of this massive investment. And I think investors are pushing back now with the stock price, so that's why it's being hammered, because they actually went negative. And if you look in their past, if they just want to stop operating cash flow, 40 billion, like 46 billion in 2021, like, so if they want to slow anything down and not do that, I think these numbers go positive pretty fast. And I think Joseph Carlson's video goes deeper into this. I'm not an expert in all of this, but my point is that it looks like they have a spigot that they can always turn. Let's lose money, let's make money. So it's not a 10x, it's maybe a double, maybe a 50% up, but in this market, I'll take 50%.
That's what I was going to say. In this market, I'll take the 2x and be happy with it. The other thing to consider is we have not seen the benefits of the money that they're investing now. So the markets will punish them, right, for spending this money now.
Right now, in this time, they're going to punish them. Yes.
Yeah, they'll punish them now. And if you're investing in this now, you're basically holding out to wait for the benefits of those investments. I mean, Rivian has a contract with Amazon to build 100,000 electric delivery vans at its factory, a former Mitsubishi plant, and they invested $500 million into Rivian in 2019. That's just one of their investments. And at some point, they are going to make these vans. There's going to be gains for them to be made as they save money, right? As they build out this charging infrastructure and electrify their fleets.
Vertically integrating the whole stack. So they're going to own all the vehicles. They don't have to go to UPS for a contract anymore. So now they own all of that. And they control the cost. And you're right, with electrification, it's cheap.
Those vehicles are going to have much less maintenance. I mean, they have a lot of trucks. The price of diesel must be crushing them right now. These are all things that are temporary. But if you see the future, even when I say the future, it's like 5 years from now, maybe not even, maybe 3 years from now, we can start to see some of the benefits.
They have their own Amazon grocery stores, their own I mean, they're taking over robotics. They're doing their own robotics for their I mean, like, they do so much we don't even know about it. We think it's just like you buy toilet paper and that's done.
And it shows up at your house.
Alphabet. I know it sounds crazy, but Alphabet might be a steal at $2,300. Obviously, a highly profitable company. Anyone who's not using Google,
27%.
I can't convince you of buying Google. I'm just saying we should take a look at some of these stats. So 1.5 trillion market cap, forward PE is 20. So is it becoming where it's like a value play now?
In order for you to find out whether you should invest in Google, you're going to Google it.
You know should I invest in Google on Google?
Right. And so, I mean, it's sort of a no-brainer, but it's like these are like the boring stock. They're not fun. They're not exciting to talk about. But in markets like this,
we are off the high. Well, right now we're here. We're 22%.
All right. Amazon was
as
40.
Low as.
Right.
Yeah. Amazon is definitely further down, and that's because I think of all the spend they're doing. Google is still showing free cash flow.
They're a software company, so it's like it's less.
Exactly.
It's less.
And they have better margins. So we know Google's doing a lot. The thing is with Google that it's not just search. Obviously, that's where they make most of their money with advertising and YouTube.
Yeah.
But I do think YouTube is growing, and we see a lot more people on YouTube and a lot more usage of YouTube. So advertising is growing there. But let's also talk about Waymo. Like, I know we all want Tesla to succeed and be the only car company that does. Hold on. I know we want Tesla to succeed and be the only car company that's full self-driving, but I think Waymo does have a future in cities as they grow. So, and they're going to partner with different car companies too. Google has what is it called in CarPlay, their own CarPlay version. Yes. Apple has their own CarPlay. Google has whatever it's called. I forgot the name of it, but these things aren't going away. So other companies besides Tesla will need autonomous driving technology that possibly Waymo is developing, maybe with other partners, but whatever. It's going to be a player. And the servers, well, let's talk about the back end. You know, you can, just like you go to AWS, Google has their own AWS.
This relates. This was a Joseph Carlson video that he posted after Netflix, after the big crash on Netflix.
There's one more unique thing about Netflix that's very specific to this company. It is the first major company to report ahead of the earnings season. Now that we've had a couple more companies report their earnings, I've noticed a common theme, something that I think is a bigger concern than just Netflix. One of my biggest holdings is Microsoft, and they just reported earnings. Remember that Microsoft is a massive gaming company. In fact, they're literally going to be the second biggest gaming company in the world. They say, and in gaming, we expect revenue to decline. It's going to decline in the middle to high single digit, driven by low engagement hours year over year. Lower engagement. That's the technical way of saying that less people are playing video games now. They say we expect Xbox content and service revenue to decline to mid-single digits. So far we know that Netflix is losing subscribers and they're forecasting 2 million loss in subscribers next quarter. But now we have Microsoft saying that they're going to have lower engagement than anticipated, and the content and service revenue of the Xbox will decline to mid-single digits. Google reported earnings, and their earnings were actually a miss. They missed on the top line and the bottom line. Don't get me wrong, Google's doing great. The weak part of the company, in fact, the weakest part of the company was YouTube. YouTube missed its numbers by the biggest margin. But then we get to the YouTube portion of Google, 6.87 billion versus 7.51 billion. They almost missed by $1 billion. YouTube is still growing, but the growth rate was much slower than anticipated.
It's good to invest in Google because they're diversified across multiple things, even though the YouTube revenue is slightly lower. But if you saw that yellow chart,
Yeah.
it's up and to the right.
This is the YouTube ad revenue, and it peaked in Q4 of 2021. So on the chart that you showed of Amazon, you can see that it's essentially retraced all of the gains from the pandemic. So what it seems like, the overall market swelled up with all the printing of money, all of the stimulus, and all the people just being home, right? Content went through the roof. People were able to spend more money. Now it's coming back to normal. So you could say that the entire market just flew off of the median trend line, and now we're getting back to it. But to your point, we're in a recession, or there's a lot of hints of a recession. So where we're at now is probably returning to where the trend line should be. So it seems like we've come down 50%, but we haven't. We
can overshoot to the downside.
Exactly.
Absolutely.
Exactly.
But the question for me is, even if we overshoot, do I not DCA into some good companies? I think I still have to, because I don't know where the bottom is.
Right.
I wish I did. I wish I could say at 60% down, that's when you go all in.
Right.
Like, that'd be amazing.
Right.
I don't know. At 40% down, it sounds like a good deal. You know what I'm saying? Amazon. And Google is 22% down, 25% down, but they have a lower PE. And honestly, both of these companies have spigots. I think when push comes to shove and they need to show some profits, they turn the spigot a little bit.
Let's say that we do get the bottom. See if we can find an indicator.
It could be a sentiment metric. It could be like looking at the sentiment of people in the country.
That sentiment chart thing that we looked at for the SoFi video.
Yes, the AAII.
The AAII, right. So maybe it's that. When we go back and look at it, when we Monday morning quarterback this thing, we might be able to find some common metric across the mega cap stocks that we can say, hey, this is something to keep in mind the next time, because once we recover from this, we're going to have another 40, 50% correction. It's just inevitable.
Yeah, and it's probably 5 to 10 years away at this point.
Yeah.
Because I think 3 in a row would. Well, I don't think 3 in a row would just hit. Like 2020. Then
famous last words.
I could be wrong, but I think we're in for a period of probably stability.
Yeah.
After this is over, just like we were in a euphoria for 2 years, now we're in a recession for 2 years.
Yeah.
And then we probably have to stabilize at some point for 2 years or whatever it is.
Yeah.
And then maybe we can go to the moon. I know this sounds like a long time is playing out, but look, I'm not going anywhere, so I might as well be buying Google and Amazon, and that there's going to be a 20-to-1 split anyway. So you would get 20 shares for every single share.
No, that's true.
That's going to happen in the next couple of months, whenever it happens. So we have 20-to-1 happening. And I'm not saying it's going to pump. I don't think we're in that kind of market, but you're going to have more shares. It's going to be cheaper to get. I think and if it stays around the same $1 trillion, $1.5 trillion, I would say DCAing is a smart thing to do for these companies.
I know that there's people watching this right now that are going to be on the Discord wondering, do I buy, or do you recommend buying before or after the split? Both Amazon and Google are going to split. I think they're both doing 20-to-1, right?
They're both doing 20-to-1.
All right, so they're both doing 20-to-1. I know that people are going to have this question. Should I wait for the split to happen before I actually buy, or not? What are your thoughts on that?
I think you shouldn't wait. I think you should DCA all along, because you can buy fractional shares. So let's say you buy half a share, right? $1,000. You're going to have 10 shares.
Yeah.
So I don't see the difference. Fractional shares have solved that problem. And then Google and Amazon are saying, well, we'll do the 20-to-1 to make it easier for people to do options on. That's basically what it is. Have more trading activity, be easier to give their own folks stock options, because when you're giving right now options, it's a $2,000 stock.
Right.
So the company itself benefits. And I think there'll just be more activity. And when there's more activity around a stock and it's easier to purchase and do options, I think also the price tends to move up. And it's Google and Amazon.
And if you look back historically, I think one of the reasons Apple was the first company to get to $1 trillion is because it just split so much.
It keeps splitting.
It kept that stock price between $100 and $200, which is it's a good amount. It's basically an expensive dinner, and a retail investor can say, oh, maybe I won't have that dinner this week and I'll just pick up a share of Apple. You're right about the options play. That totally opens up those options. But people that are holding off, waiting to buy while the share price comes down, it's important to remind you that it's not about the share price, it's about the market cap. So I agree with you that if you have money and you're waiting on the sidelines, it's a good time to pick up either one of these two, Amazon or Google, pre-split, because when it splits, you'll be able to enjoy some nice gains. That's what I think anyway. I think you'll get some gains. There's been 240 stock splits since 2010.
So after a stock split, we don't know what Google's going to do, what Amazon's going to do, but here are some statistics on do we beat the market? And over here it says percent that beat the S&P 500 is 50% after 6 months of returns, well, after a stock split. So, and once again, it's a psychology thing. I think that once Google is like $100 a share, I think it's just easier for someone who's been waiting on the sidelines. Like some people in our Discord saying, I don't want to buy a $2,000 stock. I think buying a $100 stock, they're like, I can get 2 shares. And I think that puts a little bit of pressure, and that's why it ends up beating the market in general. I'll cover one little smaller cap stock because everybody wants a smaller cap stock too. But it's MP Materials. And the reason they're interesting, if you haven't heard of them, Carlos, I'm not sure if you've been following MP Materials.
I know about them.
It's a smaller market cap at $6.3 billion. They mine rare earth minerals that are needed for like magnets and stuff, right? Electric vehicles, obviously. So, and the real cool thing is that they are the only United States rare earth mining play. There is no other pure play than them. So you literally have one. Everything else is in China.
Monopoly, guys, monopoly.
Well, at least if the United States cares about keeping its own rare earth processes going on, these guys are like your only real ticket to invest in it. So I did not participate in the $60 because I bought something else, but now it's back to roughly where I sold out. Maybe I sold a little bit higher. The PE is a little bit high. Now you're paying a 50 PE for a mining company. Like it's become crazy, right? But with electric vehicles, maybe this is appropriate for how fast they're growing.
The first thing I would want to look at is how many outstanding shares they have. That could just be a function of them not having enough shares. So 177 million shares.
Like you said, 177.5 million shares. It's not that much.
Not that many.
But still, the forward PE is actually lower, so they're growing, which is nice to see. But then I'm looking at it's a mining company with a price of sales of 15. I'm not so interested in buying it yet, so I'm not going in now, but it's always on my radar that if this drops, that if I do want to be in the EV business and I want to be well-rounded, because they're doing the magnets and stuff.
Well, you basically want to be vertically integrated in your portfolio.
I personally want to be vertically
You're trying to vertically integrate your portfolio. When it comes out of the ground, you want to get paid. When it goes to the truck, you want to get paid. When it gets to the factory, you want to get paid. When they make the car, you want to get paid.
Well, the good thing about them, they're actually trying to vertically integrate their magnet production, I believe, from the last I was doing research on them. So meaning they have the materials now, but they still have to ship them to go get processed. They don't do that in-house yet.
Yeah.
At some point, they're trying to do the facilities that are going to process these. And if people know a little bit more about, like, if they're starting that, when they're starting it, please post it in the comments. But so I'm just always keeping track of it when it becomes a little bit more reasonable that I'm interested in picking up a couple hundred shares for the long term, because this is something that is not going away with this environment, especially us against China, that kind of thing.
Right.
I feel like this company has a nice growth trajectory, and people see it. That's the thing. At a 50 PE, everybody recognizes this is not something that's being hidden.
You reminded me of something that I saw the other day. Mining is becoming an issue of national security at this point. You know,
exactly.
We're seeing now that not having the raw materials in the homeland is a serious problem for us. To Vitaly's point about mining becoming an issue of national security, which if the government at any point takes this seriously, these companies will skyrocket in the same way that Moderna and Pfizer did when health was a matter of national security.
We're talking about a decatrillion type opportunity. We see the biggest CapEx cycle opportunity in over 100 years. We call it the MAC. The mother of all CapEx cycles. It is time to unleash the arsenal of democracy to control our energy destiny. Globally, Becky, we have maybe half a terawatt hour of global battery capacity. We need about 30 terawatt hours for stationary storage and for EVs over the next 20 years. We need 60x. Each terawatt hour is $100 billion of CapEx, and then you get a multiple of that of other adjacencies. So we're talking about a decatrillion type opportunity. This is the equation. Inflation is energy innovation. We need it now. Enough horsing around.
The part about mining becoming an issue of national security, that us as the U.S., we need to secure the raw materials. The U.S. needs to vertically integrate the raw materials that are important for our future. And we're seeing now, as a result of the Russia-Ukraine war, how important energy is, right? And countries are now seeing that having this over-reliance on Russia, say for oil and natural gas, it translates to our dependency on China for the raw materials that we need to make batteries and EVs.
It's detrimental to the security of the United States to depend on these foreign powers for critical infrastructure.
Yeah.
Like having energy is a critical infrastructure.
It's pretty
right?
important.
Absolutely. So that's why MP Materials, there is a real bull case, even at the
Mm-hmm.
50 PE, and people see it. That's why it's at 50 PE and a
Yeah.
15 times sales. Like people understand this and they're buying into it. So, but even then, what's a $6 billion energy play worth? Like we know Elon keeps saying energy is worth $1 trillion. So
Right.
is MP Materials worth 12? Yeah, probably at some point.
Exactly. Like what's their piece of that?
Guys, we
Yeah.
covered what we're looking at, what we're buying. Obviously,
What we're not buying,
classics.
what we're watching. Right. Some of the old. We went back to old playlists.
Some classics that we're buying like Tesla, but some new things that we're keeping track of, obviously. So we hope you enjoyed it. Please like and subscribe. Go to the Patreon. Go to the Discord.
Hit the bell to get notified when our interview with Tom Nash goes live, when our interview with Mark Frohnmeyer goes live, and when our interview with David from We Build San Diego, a solar installer, goes live. We got a lot coming up for you. We'll see you on the next one.
Peace.